What if I told you the next multi-trillion-dollar boom won't come from Silicon Valley, but from the defense industry? That's not a guess. It's a blueprint laid out at last week's NATO summit. In a historic move, member nations pledged to allocate 5% of their GDP to defense spending by 2035, a target that could unlock over $2.7 trillion in contracts for U.S. defense contractors alone. This isn't speculative hype, it's fiscal policy backed by international consensus. And for sharp investors, it signals the start of a global arms acceleration that could rival the AI buildout in scale and impact. With inflation still sticky, interest rates holding, and broad market multiples under pressure, capital is rotating towards sectors with guaranteed demand and government-backed pipelines. Defense isn't just recession-proof, it's now growth-fueled. And unlike trend-driven tech, these companies are anchored in real budgets, multi-year contracts, and irreplaceable national security roles. Wall Street is starting to wake up to this shift, and the smart money is already flowing into defense names with scale, edge, and political leverage. These are not just plays on war, they're investments in cybersecurity, aerospace innovation, and next-gen missile defense systems for a world that's rapidly rearming. In this video, we'll reveal 3 U.S. companies uniquely positioned to ride this $2.7 trillion wave, break down their strategic advantage, and explain why now may be the most pivotal entry point in years. If you're looking for stability, scale, and serious upside, this is where the future is being funded. First on the list is a company built to thrive in an era of rising global conflict and massive military modernization, General Dynamics Corporation, ticker symbol GD. General Dynamics has long been a cornerstone of U.S. defense, but in today's environment, fueled by NATO's 5% GDP defense pledge and renewed focus on American military might, it's stepping into an even more strategic role. With a diversified portfolio spanning everything from nuclear submarines and land-based drones to Gulfstream executive jets and battlefield communication systems, General Dynamics offers something rare in the sector: multi-domain dominance. At a time when many defense contractors specialize in a narrow vertical, be it aerospace, naval, or cybersecurity, General Dynamics does all 3 and does them at scale. Recent geopolitical tensions and the growing threat of drone warfare have only accelerated demand for the types of technologies GD develops. In fact, a recent $580 million contract was awarded to its GDIT division to enhance base security through drone defense and cyber hardening, signaling that future warfare is as much digital and autonomous as it is traditional. While political risks and isolated project delays exist, General Dynamics is built to weather them. Its strong fundamentals, recurring revenue from long-cycle defense programs, and 30-plus years of dividend growth make it a reliable bet in an increasingly uncertain world. And with the U.S. pushing toward a $1 trillion defense budget and NATO unlocking trillions in potential procurement, the company's global opportunity set has never been broader. General Dynamics may not be the flashiest name in defense, but it's one of the most stable, adaptable, and deeply embedded in the infrastructure of modern warfighting. In a market hungry for both income and security, GD is starting to look less like a conservative hold, and more like a high-conviction growth engine disguised as a legacy giant. Next up is a company that sits at the intersection of artificial intelligence, national defense, and global security, Palantir Technologies Inc., ticker symbol PLTR. In a world increasingly defined by conflict, surveillance, and AI-driven decision-making, Palantir isn't just participating in these shifts, it's actively shaping them. With roots deep in defense and intelligence, and growing influence across civilian agencies and commercial enterprises, Palantir has emerged as one of the most strategically vital software companies on the planet. What makes Palantir especially compelling right now is its deepening government footprint. From the Department of Defense to NASA and the CDC, Palantir continues to land multi-year, mission-critical contracts. These aren't just big revenue drivers, they're long-duration, high-margin relationships that reinforce its economic moat. One standout example is its $795 million defense contract to deliver AI-enabled battlefield intelligence systems, and even more ambitious, Palantir is expected to play a role in the proposed U.S. version of Israel's Iron Dome, an AI-powered missile defense shield for homeland security. Beyond defense, Palantir's Foundry and Gotham platforms are being used across finance, healthcare, and infrastructure to manage complex datasets and surface insights in real time. The rise of AI is amplifying demand for these solutions. As governments and corporations alike race to harness AI's power responsibly, Palantir's platforms are becoming indispensable. Fundamentally, the company stands out. It remains debt-free, is delivering consistent organic revenue growth, and continues expanding its margins without relying on financial engineering. That financial discipline, combined with a flood of new contracts and a global shift toward AI militarization, makes Palantir uniquely positioned for long-term expansion. In short, Palantir is no longer just a defense contractor or a data analytics firm, it's an AI infrastructure provider for the most sensitive and strategic sectors in the world. And as geopolitical tensions rise, so does the relevance and resilience of Palantir's business. Finally, let's talk about a defense giant that's still a major force, but faces mounting pressure from the rise of nimble tech-driven disruptors. Lockheed Martin Corporation, ticker symbol LMT. Lockheed Martin remains one of the most recognized names in global defense, with decades of experience and a multi-billion-dollar backlog anchored by flagship programs like the F-35 fighter jet. In many ways, it's the backbone of traditional defense spending. But in today's rapidly evolving battlefield, where speed, autonomy, and software-led systems are becoming central, that legacy model is being challenged. Despite record-high defense budgets and increasing geopolitical instability, Lockheed has underperformed compared to both its global peers and newer defense startups. The reason? The startupization of defense. A wave of new players like Anduril and Palantir are developing off-the-shelf AI-driven platforms that can be deployed faster and with more flexibility than traditional contractor-built systems. These companies are self-funding R&D, taking on more risk, and offering the Department of Defense ready-to-use solutions for modern warfare, including drones, unmanned systems, and battlefield software. That doesn't mean Lockheed Martin is irrelevant. Far from it. In the first quarter of 2025, the company still delivered steady top-line growth across most divisions and achieved margin improvements in areas like missiles and aeronautics. Its backlog remains solid, and the company's long-term contracts provide cash flow stability that few others in the sector can match. But the lack of agility and limited pricing power are becoming more noticeable as defense needs evolve toward faster, more flexible deployment models. The takeaway here is that Lockheed Martin is still a pillar of U.S. defense, particularly in areas like aerospace and integrated weapons systems. However, its role may increasingly resemble that of a core infrastructure provider, essential, steady, but not leading the charge in innovation. As the defense landscape transforms, the challenge for Lockheed is clear: adapt to the new pace of modern warfare, or risk being overshadowed by the next generation of defense tech pioneers. As global defense transforms at a breakneck pace, one thing is clear: the winners of tomorrow won't just build weapons, they'll redefine how wars are fought. From Palantir's AI-driven battlefield intelligence to General Dynamics' multi-domain dominance and Lockheed Martin's foundational strength in aerospace, each of these companies represents a different piece of the evolving security puzzle. While some are charging ahead with innovation and agility, others offer resilience and scale that still matter. In a world where national defense is becoming a trillion-dollar priority, understanding where these companies stand isn't just strategic, it's essential. Thanks for watching. Stay informed, stay sharp, and keep investing in the future that's already unfolding.